Let me bring in Gaurav Mashruwala, Certified Financial Planner, who's coming today. Gaurav, thank you so much for speaking with us. Now, we have several women investors who write to us asking for advice on designing their investment portfolios. Now, the interesting thing about women investors is they always want to keep the risk absolutely low. They don't want to put their capital at risk. So for a new investor, what sort of investments would you recommend?
So, Faye, one thing is that there isn't anything called as risk-free return. It's just linked to time horizon. So, any kind of debt instruments, a fixed deposit or a bond or recurring deposit or debt mutual funds are comparatively safe in near term, say 2 to 3 years, because your principal remains protected. Moment you look at time horizon beyond that, you start losing to inflation, which you don't see, but you're actually losing to inflation. On the other hand, something like equity or equity mutual fund, which will be highly volatile in near term. Sorry. However, as we cross 7 to 9 years period, the overall portfolio, the overall equity portfolio or equity mutual fund kind of stabilizes. So, depending on their financial goals, if they are looking at something which is any event, a financial responsibility or a dream coming up, in next 2 to 3 years, they should look at debt as an asset class, debt fund or a recurring deposit or a fixed deposit. If it's something beyond 7 to 9 years, look equity as an asset class. If they have skills and time, do an equity portfolio directly, or better still, do an SIP into an equity mutual fund. For an interim period, make combination of both. So your portfolio should consist of debt as well as equity, and also have gold. Now, gold for women, not only from jewelry perspective, in which they should definitely have for enjoying and to look pretty, but otherwise, from investment perspective, they should look at gold and do a continuous SIP into a gold mutual fund.
All right, Gaurav, in fact, we have a question from one such investor who's written in. Sonali Chakrabarti writes in. She tells us she needs a corpus of 5 lakh rupees for a down payment on a home she plans to buy in November this year. And she can right now put aside about 50,000 rupees every month for the next 6 months towards that down payment. She wants to know what a good investment option will be for this amount so she can get returns, but of course keep the money safe. What do you think she should be doing for such a short time horizon? Obviously, equity is not something you would recommend, but how should she be putting this money away?
Yeah, so Faye, I agree with you again that equity is completely ruled out. Even gold in form of ETF is also ruled out. What is needed is a debt-based product. Now, depending on the tax bracket she is in, if she is in a lower tax bracket, I would encourage her to do a fixed deposit. So keep opening fixed deposit in a manner that all of them mature around November when she's planning to buy a property or she has to make that down payment or whatever next installment. Alternatively, if any bank is offering her a recurring deposit for 6 months, which I doubt, but if that's an option, then look at that. If she's in a higher tax bracket, then she may want to consider that mutual fund, though there will not be a drastic difference because she'll either get into short-term capital gains tax or dividend distribution tax will be applicable if she opts for dividend. So, debt instruments, if you are in lower tax bracket, explore fixed deposit or recurring deposit as an option, or debt mutual fund, SIP for 6 months, where in any of these products, overall principal will remain protected and will get some small amount of appreciation.
All right, Gaurav, many thanks for joining us on the show and answering our questions.